And good evening. This is the Elliott Wave update for the S&P 500 for Monday, January the 10th, 2022. It was a very good day in terms of analysis, in terms of the market following through, and in terms of the result that we got after today's big moves. So to pick up a quick review, that I continue to count the development of a intermediate fifth wave advance. And within that fifth wave advance, it will consist of 5 waves of minor degree. And as of today, I can, with some confidence, put in the completion point for minor wave 2 at today's low of 4572.75. And with that now being in, as I said last night in the update, that major low could be reached today or through the completion of this move, and that low should hold most likely for the next several weeks. And the reason behind that is because we are in an intermediate fifth wave advance. And that was wave 1, minor wave 1, and today's minor wave 2. So the result should be a minor third wave kick-in advance. And so what I was anticipating, should that get some confirmation from the market and support that this is the move that's actually happening, the market needed to form a bottom and rally strongly out of that zone. And that's exactly what we saw. So from the low at, we'll call it 45.73, the market got up to 46.65. So basically 72 points. That's a very strong rally for the S&P. And the only thing that could top that is if it gone to the 100, which we've seen it do on both sides. We've seen it go up 100 and down 100. So, but I think it did a very good job at finishing the day basically in the green. The NASDAQ finished the day in the green, the Dow did not. But the S&P finishing up the day recovering from a fairly strong sell-off. That gives support to that being complete. And we're now in a third wave. Now, what we can look at from here, again, remembering that we are ultimately looking for that tide to be taken out. And now that we have wave 2 in, the first thing I'll do is I will take out these stronger downside. For right now, well, let me just first say that if the market should go in and break, I'll give you that exact level very quickly here. If the market breaks 46.09 coming down, it would leave a 3-wave advance up. There'll be 1, 2, this is 3. And that coming back down and breaking below 46.0809 leaves that in place, which would suggest that we are going to go down and make an additional new low below 45.72, and that we're likely to be heading to give a test of 45.20. And if we broke that 45.20, then a whole different picture, which does not include rallies above 48.08 right now. So far, we're pretty solid in terms of this rally. But again, I have seen when markets do this, come in tomorrow and do the opposite, and we see another huge tranche of selling hit the market. So, and 3 waves up, even though I can count 5 down, maybe suggesting that this wave 2 is not complete, but with the understanding that 45.20 remains that no break zone. If it breaks below 45.20, then it's not a wave 2. And this likely would not be a wave 1. And the reason being is that wave 2 cannot retrace or more than wave 1. So in other words, if that is the first wave up, wave 2 cannot break the low. Then it's not correcting a wave 1. it would be correcting what ultimately likely would be labeled as intermediate wave 5, as I discussed last night. Now, that's not necessarily the case. Again, this rally was strong. It was a bullish engulfing bar and pretty much almost engulfed the entire decline. But the body of that candle is extremely bullish, and that's on a 4-hour chart. When I bring it down to the 1-hour chart, it's again a fairly bullish picture because we have it cleaner here. Boom, boom, boom. Now this, I love that it's just a little doji sitting right there waiting. All we need is a little bit more downtick and then a rally up. And I seriously, just like this one, it wasn't all that big. I don't need all that much. I mean, technically, we could throw some Fibonacci on here and maybe get a low somewhere around 46.45. Right now, 46.45 is where the hourly 20 and 4 are sitting. The VH is below all that. So again, I would believe at this stage that those levels would provide support. So in other words, for tomorrow, I am expecting for a little bit of a pullback, but to hold that 20 and that 4. Now, again, this may not be the absolute high for this, what would be considered a third wave, but we might get up to 46.70 or keep going before we pull back. But as long as that pullback remains just a small 3 waves and does not come back down and break 46.09, I'll look for the possibility that it can get as low as 46.40, 45, I'm going to call it. And that's where the 20 and the 4. And then once we get that 5th wave, that'll give strong confirmation that this wave 2 is done and we're now heading higher. And ultimately, we will begin to break above 48.08 and on up as previously discussed. Now, to put some additional Fibonacci on this, I'm going to take it back up to the 4-hour chart. And I'm going to run some extensions to get estimates for a third wave. So first I'm going to do is take off this. Those are the retracements. And then I've got that, and I'm going to go from the bottom of wave 1 to the top of wave 1, down to today's low. Let's probably that fixed, but I'll let it go for right now. And so a third wave in a relationship to a first wave would be expected to take out that high number 1 at 48.08. 100%, or wave 3 would be 100% of the length of wave 1 comes in at 48.58. So already new highs. So that one it can take. But more realistically, again, because of the power of the third wave, we'd be looking at a possible move to 5,000. Now, I'm approaching this technically, so I'm not going to sit here and fill you full of like what ifs, because what if earnings turn out well? What if everybody reports blow the doors off? Of course, there's going to be a positive reaction from the market, whether they really get that they're just talking about last year and not, forward guidance. So a lot can happen with forward guidance. If we have companies that are going to look at things realistically and realize how all of this affects the production, the supply, et cetera, et cetera. So we have a lot to get through. But the third wave, well, 5,000 is not out of the realm of possibilities. Again, if our count is correct, which so far it is holding, and the move off of that low gives me support that they are going to continue to rally. Again, we're technical. I cannot put fundamentals into this picture. So your mindset, again, just dropping in on that subject, the mindset has to be that we're looking at this market technically. These are numbers. So you have to look at it like an algorithm almost, okay? An algorithm is just taking the numbers, putting it together and spitting out an answer. That's what those Fibonacci's do. It's not saying that's where the market's going to go. It's just a number, and it's a technical number. And that's what we're presenting as technical analysis. So to be able to trade. So we're not getting married to the downside. We're not getting married to the upside. We're just getting married to the technicals of what the possibilities for this market to do. Again, tomorrow and moving a little bit forward. So if this count is correct and we're in and start of a minor third wave rally, then I would expect that it should go pretty quick through these resistance levels. And then start to maybe pause and take a look once it gets up a little, if it can get to 4,800. But once it starts getting up there, it's going to, it might take a little while to give it a good boost and get it up to here. And there will be corrections in between. To begin with, I'm looking for wave one to finish, one of three to finish, do a 2 of 3, and then get a 3 of 3 movie and move. And that's the one that I think would blast us through a lot of the resistance. So right now we're dealing with tomorrow. So tomorrow I'm looking for a continuation. And again, this absolute first wave, 46.81 is some resistance, 47.15 I like very much, because that's where the 200, the hourly 200 comes in and intersects at 47.14. So that would be beautiful. A little continuation of the rally, we go up another 50, 60 points, and then pull back in a wave 2. Now within this, I'm just looking for wave 1 to finish up here. So I've got a third wave, a fourth, and then a fifth. Maybe the third gets us up to here. This what's in action now gets us up here, and overnight we sit and we sit. We put in a little pullback, and then finish up here, and then do a little bit larger, because then we're looking for a wave 2, 1 of 3, 2 of 3, 3 of 3. Okay, so tomorrow, looking for upside. Pay attention to moving averages. Again, we have to include that downside scenario, because what if? So I got it both covered. We've got the upside cover, what to look for, what it should look like, and what it will do as it starts to break above these moving averages. We'll get the acceleration to the upside, as we did when it broke to the downside. It starts to accelerate. If it breaks 46.08, I would expect some acceleration, because it's getting cleaner and clearer that we're heading below that low from today, which is at 42.72. So that could really start to affect, again, that this completed something much bigger rather than a minor first wave. That's not on the board, but if that breaks, that's what it should look like and you should expect. And in the meantime, you'll be able to trade that downside getting down there. So let's not forget, if it can't get above the 20 and it starts to turn lower, breaks back below the 8, breaks below the 4, and they both turn lower, then yeah, you're looking for these zones to start to break down. 46.23 we have, then 46.09. And because there were large gaps in between, that's kind of how the support's going to be. You're going to have to move it. Okay, enough said. The next update will be on Tuesday, January the 11th.